Hello traders, welcome back to new video in our exciting series. I am Sanjay from Tribe International and I am thrilled to continue this journey with you. TriveHub, where financial empowerment begins. This session is powered by TriveHub, a place for all financial education, an initiative by Tribe to empower traders with knowledge, tools, and community support to excel in the financial markets. Today, we will understand advanced trend analysis in detail. In this video, we are going to cover the factors should be considered to know the quality of trends, and we will break down how to identify healthy trends, evaluate their significance, and apply this knowledge into charts to trade Forex. Video Part 1. Why it is important to know the trend. Trading against the trend without a trend or poor quality trends are one of the most common reason for trade failure. The quality or strong trends have more predictable success, or you can say they have a very high edge. An uptrend is represented by a series of successively higher highs and higher lows, while a downtrend is represented by a series of successively lower highs and lower lows, and we know that. So why we would need to do all this? Because trends form and diminishes in the market, and if you take a long entry at the extended uptrend, then the risk of trade failure is very high cause of instant reversals. But instead, if you do some advanced trend analysis to take entries at the start or at the middle of the trend, but not at the highs. After this video, you will have the powerful knowledge to avoid late entries in a trend, and it will gonna pump up your trading game. So let's get started and discuss some factors need to be considered into advanced trend analysis. The highest skill any trader can aspire to is the ability to read pure price action. So the first factor is cycle amplitude. Here you can see a uptrend is going on, but we can differentiate the moves with cycle amplitudes. Cycle amplitude refers to the price distance covered by one swing. So in this uptrend, you can see the up cycle amplitude, means the up movement amplitude is denoted by yellow color lines, and the down cycle amplitude is denoted by red lines. So from this bottom to the top, a complete swing represent one up cycle amplitude, and then from that particular top, the next swing low represents the down cycle amplitude. And as we move ahead into the trend, the cycle amplitudes are decreasing in size for the up cycle also and the down cycle also. So each and every new cycle is forming smaller and smaller amplitudes. So this can result in a slowdown of trend, because you see the market participants are not able to keep the momentum up to its previous pace in each and every consecutive cycle of this uptrend. So we can say the trend is losing its momentum in each and every consecutive swings. And similarly, if we find this kind of formation in live charts, then you can also gauge that the trend is losing its potential to move continuously up and up in the upcoming future. So gradually decreasing up and down cycle amplitude shows that the trend is weakening we have some variations of these cycle amplitudes. So the first type of structure is contracting price action, or you can say converging, because both of these trend line, the channel line and the major trend line, is converging. They may intersect at some point in future. So this is a contracting price action where the amplitudes are decreasing in consecutive swings. The second variation is even price action. It can be denoted as neutral or bullish because the cycle amplitudes are remaining same each and every subsequent swings. The trend is very healthy and it is keeping its previous pace, and all of the cycle amplitudes are of same size. But if we compare it with the previous contracting price action pattern, then we can see it is showing us some kind of weakness in the uptrend and it is a bearish structure. Even the market is in uptrend, but the momentum is decreasing, cycle amplitudes are decreasing. So this is bearish in nature. In near future, a reversal can occur from there. And the third type of variation is expanding price action, or you can say diverging, because these two trend lines are diverging with each other. They are moving far away and they cannot be intersected in the near future, and each of the cycle amplitude is increasing in nature. And you can say this is bullish, but this is also volatile, because you can see each of the swing highs are very significant. They are forming at good significant highs, but at the same time the swing lows are also brutal, means they are also falling around the previous swing lows. So this is a very volatile type of structure and you may not be able to draw that much of a good conclusion out of it. So these are three kind of variations for cycle amplitude. A first one shows bearish type of structure, second one is neutral, or you can say it is bullish and it may intend to continue the rise in the prices, and the third one is very volatile. Second factor is thrust analysis. Thrust, in simple word, is the distance between two swing highs. So here you can see this is the first swing high and the market formed second swing high. So the distance from the first to the second one is thrust, and we have measured it in red color lines. So this thrust is increased in the second attempt of the market movement. So here from the second swing high to the third swing high, the market has moved a little bit more up in comparison to the previous one, because you can see and compare the previous measurement of red line is smaller than the current one. So we can say that this uptrend is increasing its strength. So the thrust indicates the trend is strengthening or is it weakening. When the thrust size increases in an uptrend and downtrend, it indicates a trend strengthening. When the thrust size decreases in an uptrend or a downtrend, it indicates a trend weakening. And the logic behind this thrust analysis is the momentum, that the momentum is increasing in each and every swing. The buyers are forming significant new highs in each attempt. So you can say that the buyers have a lot of buying pressure in them and they are overpowering the sellers. Let's take an example and see on this chart the initial swing was this much only, then we got some smaller swings, and then the thrust increased, means the size in comparison to the last thrust is very much higher. So we can expect more up move in the upcoming future because the buying strength is increasing in each and every swings, and this pattern is continuing itself, means the upthrusts are increasing and increasing. If they starts to decline in near future, let's say on this chart, these thrusts are decreasing in nature, so it is showing us weakening of this uptrend, and we might see a good reversal from this trend. So whenever we see a signal of thrusts increasing, you can take entries in the direction of the original trend, and if you are seeing that subsequent thrusts are declining, means the momentum is declining, so you can avoid taking entries in those weak trends. Here is a simple illustration where weakening of trend as thrust are reducing. So initially we have increasing thrust, sign of strength in an uptrend, but later we are seeing shortening of subsequent thrusts. So we might see a change in the trend. You can see here on this chart also, we have seen a shortening of thrust on the third attempt, and then the market opened in the form of gap up, formed this thrust, and then fell down and changed the market direction. So this is how you can keep track of market thrust and no reversals before it occurs. Third factor is cycle period. Earlier we have discussed about the size of price movement, but now in this cycle period factor we have to measure the duration of a particular cycle. So let's say from this particular swing high to the next swing high, how much period has passed and how much time it has taken, and then we will gonna compare it with the next cycle. So if cycle periods are gradually declining, then we can say that the urgency of buyers and sellers to break the particular structure is rising, and we might see a change in the structure of current market scenario. So cycle period refers to the duration or the time it takes to complete one cycle in the market. It can be from one swing high to next swing high, or it can be from one swing low to the next swing low. So let's see on this particular chart. Earlier, to form one complete cycle of swing highs, it took 88 candles, but to form second new high, it only took 72 bars, whereas on the third attempt the bar formed were only 44 bars. So we can see here that gradually the cycle period is declining, and after this last swing high the market tried to form a very big candle, and after some range it broken down below the major trend line and changed the market direction from uptrend to downtrend. So in the last two factor we were measuring vertically the price movement, but in this third factor we need to measure the horizontal timeline to get a comprehensive view of market movements. Fourth thing we need to look at is average bar range. What is average bar range? It is the size of candles the market is forming in a particular trend. So let's say we have a very good uptrend going on and we need to measure 100% size of its candle, which include the wick plus the actual body. So whenever a trend has started, it will gonna show you big momentum bars in it, and at the end of the uptrend, or when the uptrend is about to diminish itself or it is about to reverse, at that point you will gonna get signals from candles also. What signals it can be? It will be reduction in the size of bars in the direction of up movement. So let's say we have an uptrend, so we will observe some green color bars at the start of the trend. They will be very good momentum bars, but at the end of the trend the bars will starts to decline themselves, the size will gonna decline, and that decrease in the bar range will gonna show you that there is some kind of potential weakness is going on in this particular trend. So you can take your decision to exit from existing position, or you can stop taking new entries in the upside direction. And why would the candles range will gonna decline at the extended uptrends? The reason is that if a trend is about to decline itself or reverse itself, then the buyers will starts to reduce their buying activity, and not much of the players are willing to buy high prices in the particular trend. So that will gonna reduce the buying pressure and the candle sizes starts to decline at the top of the trend. So you will gonna see some range bars or doji candles or hammer candles, spinning tops, such kind of small sizes candles will gonna appear, and that will be the signal for trend weakness. Similarly, in the downtrend also, whenever the trend has started, you will gonna see some big red color momentum bars in it, but at the end of the downtrend you will gonna see some small candles forming up subsequently, and that will gonna give you early indication that you should exit your prior shorts and do not initiate new short positions in this particular trend, because the trend might change its direction, and when the direction is actually changing you can initiate long entries from there. Alright, so this is how this average bar range factor will gonna help you analyze the exhaustion of prior trend and let you know when is a new trend is starting. Here on this chart you can see at this point a new uptrend has started with some very big momentum candles. After that we had some small pullbacks but with good green color bars, and then at the middle of this trend we got some horizontal range, and that range got broken out with big momentum candles. Here you can see the upside candles have reduced their size and we are seeing very few or no green color momentum candles. These green color candles are very small in sizes. Only one green momentum bar has been seen, which is at the end of this trend, and we call it an exhaustion candle. We will discuss it in detail in later sections, but these candles is very small, okay, and this has indicated the trend can change its direction, and this is what has happened. The big momentum bar is followed by big momentum red color candles and the market went into an extended pullback. So if we read candles carefully, we can gauge the early indication the market has us to offer. Fifth factor is bar retracement symmetry. What is bar retracement symmetry? It is a measurement of number of bars forming in particular retracements in a trend. So a change in the number of bars in a retracement is also an early indication of a potential change in trend behavior. This is Euro CHF 30-minute chart, and we are seeing a very good uptrend going on. So we can just use a channel to know that it is a very good uptrend going on, and we are talking about bar retracements. So what will be the retracement direction? It will be down because the trend is on the upside. So all of the retracements will gonna be on the downside. So if we just measure the candles forming in particular retracement, is in this retracement is 9 bars, and if you measure the next retracement, it is 26 bars. So after 9 bars we are seeing increase in number of bars. So you can see after this higher number of candles retracement, we have seen a slow up move, and after this slow up move we have seen 21 bars in the retracement. So the number of bars has not increased in comparison to the previous one, and if we just compare this one, it have 24 bars. So we can say that the number of bars are not that much significantly changing. So we can expect more up moves in this trend because 26, 21 and 24 is not a big change in the movement. Measure the next one, it has given us 27 bars. So still this symmetry is maintained. We have seen a very good up move till this channel resistance line, and if we measure this retracement, it is showing us 35 bars, and this is a very significant change in the retracement candles. So the number of retracement candles have increased in this scenario. So we can see in the later attempt of market to rise up, it has not been able to cross the previous swing high. Alright, and the up move was not that much significant. So what happened after this increase in retracement candles is the price broken below this support area, made this retest and changed the trend behavior as we have discussed in our description. So this is how a change in bar retracement symmetry will gonna give you an early indication of change in trend. So if the symmetry is maintained as we have seen in this particular area where the symmetry is same, so we are seeing good up movement. But when this symmetry got broken down, the trend has reversed after forming some kind of lower high structure and broken below the previous swing low. So we are seeing a good trend change here. Sixth factor is average candlestick body to total range ratio. This might look similar to average bar range factor, but it have a little bit of variation into it. In the average bar range, we have measured the total size of the candle, but in this factor we will going to measure the body range of a candle. So if candles body sizes are decreasing in the total candles range in an uptrend, can be an indication of potential weakness in that uptrend, and in similar fashion a decrease in the body sizes of candles in a downtrend is weakness in bearish trend, and it can convert the downtrend into a bullish trend in upcoming future. So we have to measure the body sizes, and what happens is at extended uptrend. When the uptrend is about to end, the body sizes of candles will start to decline consecutively and they will form smaller and smaller body sizes. So why small body sizes? It is because when sellers start to come in, they try to push the buyers from the upside and it will create a wick on the upside of the candle and the body size will starts to form smaller in comparison to the total candle. So that particular wick is sellers coming in into the market. So that can be an early signal for you to cover your longs and initiate new short positions on bearish signals. You can track the body sizes by just observing simply, or you can use average true range indicator to know that the average range of particular candles are declining or not. Look at this chart. The trend has started from this point and it formed very good momentum bars here, but in the middle of this trend these three bullish candles have started to form some wicks from the upside and their body sizes are closing around 60% of the size. But when the trend got started, the candles are forming momentumly and their body sizes are around 80% to 90% of the total candle size. So here you can see the average body size has declined and the market went into a small pullback, or you can say a short-term pause. Then the trend again resumed with a very good momentum bar, but here at the top in the last 7 to 8 candles the wicks are there. The sellers have came in into this structure and they started to push down the buyers and we got some wicks here. So that is an indication of sellers coming in into a market for a pullback, or it can be a reversal. So what has happened? It has broken down this major trend line. So the pullback is no more a pullback, it has been converted into a downtrend. And you will find this structure in downtrends also. When the downtrend is about to end or it is about to form a pullback, you will gonna see some wicks on the lower side of the candles. Now that we have discussed 6 important factors of advanced trend analysis, I know you must be wondering that few of them are similar, but there will be many scenarios where average bar range factor is not available on a particular currency pair, but you can use average candlestick body to range ratio factors there. Or there may be some chances where thrust analysis factor is not available, but you can use bar retracement symmetry factor to gauge the strength of a particular trend. So in trading we need a lot of subjectivity, and to do that we need to learn each and every factor of it and take informed decision by doing trial and error method. So that is why we have covered all of the factors used in advanced trend analysis so that you can apply it on practical charts. That's all for this video. We'll cover more important topics in the next one. Make sure to subscribe to our community channels to stay updated. Thanks for sticking around. If you found this video helpful, there is plenty more to come in our series on Forex and technical analysis. And don't forget, for all your trading needs, visit TriveHub.com. For more in-depth trading education, head over to TriveHub.com. Thanks for watching, happy trading, and I'll see you in the next video.